Dustin, today is a big day, right? We have
Why? Oh,
Tesla earnings, Google earnings, plus we got all kinds of good stuff to talk about since last week. Um,
yeah, the AI world ending over and over again.
every
Uh,
week, basically.
yeah, listener questions as always. We have a lot to talk about, so we should jump into it because I want to make sure we get to listener questions. Let's start with the latest Kimi model releasing, and it seems like it's demolishing these other models in regards to cost per like
Per
output
token.
or per intelligence or yeah token. I hate the token metric because I don't know what a
Yeah,
token means, you know.
exactly. I mean, I'm surprised that the industry has sort of like consolidated around this token thing because it's like token maxing, use as much
Yes.
tokens or cost per token. Not all tokens are created equal, so there is this definitely it doesn't feel like the right metric for us to be focused on at all. But why don't you start by telling us what Kimi is, and just in case
Yes.
anybody doesn't already know.
So Kimi is an AI model just like ChatGPT, Gemini, Claude. The big difference is it's open source, and it's trained differently. It's trained on the results from the frontier models as opposed to like I don't know, brand new training or like frontier training. I'm sure
Okay.
there's a word for that. So the training's very different. The model's way more cost effective. It's open source, so you could run a lot of uh, versions of the Kimi model locally. Not all of them. Like the latest one that was just released, you can't run locally yet. I believe that's coming next month, if I remember correctly.
Okay.
Um, you need a large machine to do that, but it does kind of change the game in the sense of, well, how does this affect Micron? How does this affect NVIDIA? Do we really need all of the these parts in order to, you know, to for AI to be as effective as it is, right?
Yeah.
And what does this mean for the frontier models of Claude and Gemini and
OpenAI.
ChatGPT and
Yeah.
Codex? Yeah, like what's the future looking like, Hamid? Should I be
Yeah.
nervous? Should I not be nervous?
Well, I have a long response to this, but before I start on my response, one other important factor of Kimi is that it's Chinese made, and it sent a lot of people into panic. The administration is looking at potentially having some banning sort of open source models that are like from China, or there's people calling on American companies not being allowed to use Chinese open source models because it might destroy everything. So there's a lot of panic and fear out there just that has happened in the last week. Um, and this model, by the way, is also largely responsible for the semiconductor industry getting hit pretty hard over the past week. The stocks were largely down until I think yesterday. They sort of finally had a rebound a little bit, and then there's sort of this notion that even people like Chamath, for example, who's one of the investors that's very outspoken out there, is like talking as if this is over for like Anthropic and ChatGPT and OpenAI. And I have a very different view on this whole thing, and I thought that it might be worth sharing. Um, and my view on it sort of starts with reiterating Jevons paradox, and it might be good to sort of like go over what Jevons paradox is before we like go into some of the details. But what Jevons paradox is, and let me backtrack a little bit. In 1865, this British economist, his name was William Stanley Jevons, which is why it's called Jevons paradox. Noticed that as steam engines became more fuel efficient, England's overall consumption of coal just skyrocketed. So it didn't, like it was sort of paradoxical because as the engines became cheaper, instead of basically fewer dollars being spent on engines and less coal being consumed, it was having the exact opposite effect. And before we immediately apply it to AI, I want to also step back and talk a little bit about Moore's law, right? So everybody has heard about Moore's law, and not everybody kind of knows exactly where Moore's law came from. So it might be worth spending just a moment on it. But in 1965, Gordon Moore, who was one of the co-founders of Intel, or later became one of the co-founders of Intel, noticed that roughly every 2 years, the number of transistors that we can pack on a single chip doubles, and the cost of the chip also halves. So that trend seems to happen every couple of years. This was noticed in 1965, by the way, and he sort of speculated that this trend might continue for some period of time. That speculation sort of has turned into what is now known as Moore's law, and it turns out that it has held true largely, plus or minus a little bit, obviously, for the last 60 years, right? So every couple of years for the last 60 years, the number of transistors that we can pack on a chip has roughly doubled, and the cost of computing has roughly halved. So what does that mean? It means in the last 60 years, we have gotten basically 2 to the 30th power more efficiency and more transistors on a chip, and more power out of microprocessors, and the cost has also gone down roughly that much. So let's translate what that means, because 2 to the 30th power, who knows how big of a number that is, right?
I don't even think that number exists.
Well, that number happens to be roughly 1 billion. So since 1965 to today, computers and chips in general have roughly 1 billion times more power, and they cost 1 billion times less than they did in 1965. So how does that translate to reality? It translates to reality in that, like, all of the computing power in the entire world in 1965 basically can fit into a dollar calculator that you put into your pocket, right? Like, because it's about 1 billion times less expensive and 1 billion times more powerful. So, so what has that meant for the semiconductor industry? Do we spend less money? Do we spend the same amount of money, or do we spend more money than we did in 1965? That would be the question that I pose to you. Obviously, we know what the answer is, which is that we spend a lot more, maybe billions of times more than we did back. Certainly millions of times more than we did back then. Maybe if we adjusted for inflation, it's not quite millions of times, but we spend a lot more money on computing today than we do, despite the 1 billion times more efficiency. So the fact that every so often, every few weeks, or sometimes days, it seems like we talk about, oh my gosh, this efficiency gains in AI chips or in algorithms for memory, or what Kimi is doing with respect to token efficiency, for example, and cost efficiency, what this is going to do, and it's going to destroy the entire AI industry. It's the exact opposite. It basically means that the consumption and use of that resource is going to exponentially grow as a result. And because of those efficiency gains, we're actually going to use it for way more things than we would have otherwise. And it turns out that Kimi will very likely be very, very good for the industry, over the coming years. Now, how do I know that with so much confidence? Well, let's just backtrack 1 year, 1 year and a few months. In February of 2025, what was announced? DeepSeek, if you remember, right? DeepSeek
Yes.
was one of the, again, state-of-the-art models at the time that was trained on what the Chinese team that made DeepSeek claimed was about $5 million of spend. And everybody who looked at it was like, wow, this is incredibly efficient. And basically all the model creators started to build some of those things into their own algorithms, whether it was Meta or OpenAI or Anthropic. They all brought those efficiency gains into their own systems. And now here we are 14 months later. Do we spend more or less on chips and AI and memory and all of these things? And it turns out we spend significantly more. And this is why, sort of like, having this background and understanding of Jevons paradox, the efficiency gains actually turns out to be exponentially more beneficial to the resource consumption of that thing that is getting the efficiencies, is very important. And Kimi should be welcomed by everyone, including in my view that like the government and companies. Obviously, we should make sure that our data is not going to the wrong places, but embracing these models is actually a good thing, and it does not mean the end of Anthropic. Those guys will figure it out. Trust me, they have plenty of really, really smart people there. Anthropic is going to be a trillion-dollar company, I'm sure, and nobody needs to sort of cry for them, even if they fail. Hey, you know what? We got to let the market sort of play this out. Um, but fundamentally, what it means is that we're just going to have more AI in more places, and that consumption is going to mean more AI chips, more NVIDIA chips, more Micron chips. All of those things are going to be consumed at a higher rate. So again, these are not necessarily statements of fact. This is sort of like my observation of like the past efficiency gains, Jevons paradox, all of it sort of like consolidated into this view that like, no, this Kimi thing is actually a very, very good thing for the industry.
So basically, if I'm just summarizing here, what you're saying is if you're invested in the AI play,
Right.
you should be rooting for efficiencies because it's actually going to drive the
100%.
market, not hurt the market.
100%. You want more efficiency because we know we would use AI in more places if it was cheaper, and that is definitively the case. And there's no question about it. We find more use cases for it every single day. Cancer is not yet cured, the last time I checked. So there's lots of potential areas that we need to be using AI and these capabilities, and we need better, more efficient models that are smarter and continue to get there. Assuming we don't kill ourselves in the process, this is all goodness from my perspective.
I'm just checking to see if we have the Google and Tesla earnings. My computer's just not loading here. Okay.
You want me to check on them? Let's
Yeah,
see. Tesla
it's just slow.
is I think Earnings Hub is getting hit pretty hard right now, huh?
I would never
Let's see.
blame Earnings Hub.
Oh, it's actually not loading. Here we go. It just loaded. Revenue beat of 11%, almost 12%, 28 billion versus 25 expected. But EPS missed by 25%, 44 cents expected. It came in at 33 cents for Tesla. So
And the stock is down 1.5% after. Is that wait, sorry, maybe that was just for today, not after hours.
let's see. Yeah, and we don't have the after hours numbers yet for Tesla.
Gotcha. Okay, I know these are just high level numbers, but what are your initial thoughts?
Well, we kind of knew that they were going to beat on revenue because the deliveries were significantly higher than expected. But I'm surprised about the EPS miss. And it looks like we have Google's earnings that has come in beating revenue by 5% at 119.8 billion versus 113 billion expected. That's an incredibly high beat. 5% doesn't seem like much, but that's a $6 billion beat on
Right.
$113 billion of revenue expectation, which is pretty incredible, especially since that was already significantly up year over year. But then the EPS beat is astronomical at 217%, $9.11 per share. Estimates were $2.87. Now, I suspect the earnings beat or EPS beat for Google has a lot to do with one-time benefits, probably because of the SpaceX IPO, because Google owns a pretty significant chunk of SpaceX. And they probably had to mark that to market based on the IPO price. And I suspect a lot of that $9 probably comes from that. Now, that's total speculation. We'll find out later. And then what's happening with the stock after hours? Do we know? No, we don't have that.
I don't think we know.
Yeah.
We did have one listener write in. I think they're talking about Tesla's down 3% after hours.
Okay. I don't know what's
So
going on with Earnings Hub there. It does look like our calendar is missing some logos there. So um,
I think it's
we
getting
might be having
overloaded.
issues.
Yeah.
Yeah. Oh, there we go. It's now loading just fine.
Yeah, but still missing the after
The
hours.
after hours pricing.
Yeah.
Yeah. Okay.
Something to fix.
But we can always come back to evaluate Tesla and Google's after hours
Yeah.
reactions. What are your thoughts on Google in particular? Because it's one of the hyperscalers, obviously.
Yeah. And
Almost 6% beat on revenue, top line revenue. Because people keep saying like, oh, this AI stuff is not actually generating any revenue, but it turns out these hyperscalers' revenues are growing faster than ever. It's not a coincidence that it's growing faster than ever. What are your thoughts on that?
yeah, I also own Google, so I'm very invested, pun intended. Um, I'm I'm pretty bullish on Google. I really like how they are attacking um, this AI wave with Gemini. I know it was a rough start initially, but I think one, their models are fantastic. Are they the best? No. Do they have to be? No. Would it be nice if they were? Sure. But why don't they have to be? Because they're in the right real estate, meaning they own Chrome, which
Hmm.
basically everyone uses, and they own Android, which enough people use.
Right,
And that puts Gemini front and center of both of these products.
right. I
So
actually
I
find myself asking questions of just in the Google Chrome search bar all the time, where I don't want to ask
Mhm,
ChatGPT or
right, and they own Google
Claude.
search. Yes.
And sometimes I don't want to ask them just because I don't want it to be in my search history, even though like Gemini is technically putting it in my search history, but like
Yeah.
I don't want my left sidebar cluttered with just random, like I'm just curious, like how many light years is it from here to the nearest star or whatever, like yeah, and it does such a good job of answering those questions that it's kind of nice.
Yeah, and I also find, at least for me, it seems like Gemini is the most up to date in regards to current events. Like if something
Yeah,
happens, I could ask Gemini and it's going to have that answer for me. Grok's pretty good too with that, but I do find like Claude and ChatGPT are a little bit slower or less
yeah,
accurate from that perspective. Another piece talking about like kind of Google being on the forefront is they're also doing work on the quantum side of things, and who knows if quantum is coming anytime soon or not. But
my money is
when I
on not,
think
by the way.
sure, but
Because all of our monies will disappear once quantum comes. So it doesn't matter which side your money is on.
yeah,
I'm going to
um,
hope that it's on the not.
and I think a lot of people were on the knot for the AI stuff until it showed up. So
Yeah,
that's
that's
what
true.
kind of gives me pause of like, oh,
Yeah,
maybe there's something more real here, or maybe AI is going to help unlock quantum.
right.
Um, but when I think of all these different frontier model AI plays, how many of them are working on quantum and doing AI? It's Google and Microsoft, I think, are the only two.
Right.
So and it's not that that's a big focus for them. It's a focus, but not a big one. But I just like that they're on the forefront of a lot of future technologies.
Yeah.
Um, so I'm a big fan of the company.
Yeah. That's true. Google also has a tremendous talent pool that's very deep and like very vested. So that's always something that they have had going for them.
Yeah,
Um,
and they have some of the best like services out there in regards to like Gmail, Google Docs. Like people aren't
right.
leaving these products. It's a lot of lock in. Now with Gemini, they're actually getting people to pay for their products, which they haven't been able to do for years.
Right.
Um,
Right.
so okay, let's move on to our portfolio updates for the week. So you sold the stock and bought a stock. Do you remember what
I
you
do
did?
remember.
That's the test of the week.
um, so I sold Robinhood, and with most of the money, I bought Meta. And the reason for that is because I'm loving Meta more and more. As every day passes, there's something positive that comes out about Meta that just keeps making them stronger and stronger in my view as a company. And until their stock is, I don't know, in its where Meta is currently, I feel like the stock under $1,000 is roughly $1,000 is undervalued. Meaning, if Meta was a $900 stock, I would still view it the same way, that it's like it just keeps getting better every day, and most of that value of like how it's getting better is not baked into the stock yet. Again, this is
Right.
just my opinion. Um, but uh, the latest news for Meta is that like they've released a significantly better AI model that is on par with like previous releases of Opus, for example. So it's like up there in terms of capability. In terms of cost, it's less than 1/10 of what those models cost. They started to offer it in API form, so people can start actually developing against Meta's AI tools. And they're starting to bake it into their glasses and like all of their products, and they're starting to put it into WhatsApp and offer business plans around it. There's like lots of business opportunities, AI business opportunities for Meta. And then separate from that, they are rumored to be in discussions for potentially a $10 billion, possibly more, deal with Anthropic for leasing them data center capacity. So all of a sudden, this new multi $10 billion revenue opportunity is emerging from their data center investments that they've been making. So Meta, just to me, just continues to get become a better story, despite its existing products also accelerating in revenue growth and profits. So um, none of that positiveness of what Meta is doing has been reflected in its stock for the past year. So it's trading at a lower price than it did a year ago, despite having more than 25-30% more revenue, despite having more profits and so on. So I like Meta more and more. It's not that I don't like Robinhood, but now like my view is that Meta might have more potential of exploding in the coming years as opposed to Robinhood. So I decided to sort of trade in some of my Robinhood for my Meta without affecting my cash. In fact, I increased my cash just a little bit as well. So that's the reason for the sale on Robinhood. Not that I'm like turning sour on Robinhood, but then I absolutely am liking Meta more and more. Um, so that was the trade. Now, I noticed you made a trade as well. Or do you have any questions on
Well,
that before we?
I always have follow-up questions. I
Yeah,
was
go
just
for
gonna
it. Go for
ask,
it.
talking about the Anthropic Meta potential data center deal, do you think there's a risk long term of having a deal between two direct competitors where I don't know if Anthropic wants to be paying Meta forever, and I don't know if Meta wants to be supporting Anthropic forever,
Yeah.
being that they have competing models? What do you think about that?
Yeah, these deals, including the SpaceX one, for example, with Anthropic that they made, they're all based on this, like we can quit at any time with a 90-day notice type of contingency. So I suspect Meta's deal is going to have a similar sort of contingency. Um, Y- Yeah, I mean, there's always been this sort of concern of being in coopetition, as they call it, cooperation and
Mhm.
competition between some of these large companies, and that's been the case since the tech industry in the '80s has been sort of coopetitioning, if you will. Um, where they cooperate on some aspects of what they're working on and compete on other aspects. Amazon and Netflix is a perfect example of that. For the past 15, 20 years, Amazon has been the sole provider of all the infrastructure for Netflix, but then they're also in competition with them between Amazon Prime and Netflix, right? So
Sure.
they do have this sort of track record of being the tech industry as a whole, not these specific companies, but the tech industry as a whole has a pretty good track record of uh, being good about competing with one another, but simultaneously being each other's customers as well. So that has already played itself out. I feel like since the '80s, and has been figured out. So even going back to the 80s as the example, or not 80s and 90s, Microsoft, for example, competed with Apple, yet they had Microsoft Office for the Mac OS, which was like a big driver of what even allowed people to purchase Macs. Because if
Right.
you didn't have Office on the Mac in the 90s, it was just like game over. Nobody's gonna buy a Mac. So they helped them in that sense, but at the same time, they were competitors because Windows and Apple were competing OSs. So uh, I don't think they're going to try to hurt each other by like all of a sudden purposely turning something off for the other.
Right. But you think long term, there's a world where these deals actually like work out, and maybe Anthropic doesn't necessarily build their own data centers, or they will, or they do are, but they will always kind of lean on um, potentially
Some of
third
their
parties.
partners. Yeah,
Yeah.
I think there is a world where all of the above will happen, right? Like, in a compute constrained world, you're going to have to sort of all grow up in this same sort of way. Even Meta is leasing computing power from others as well, so it's kind of interesting what is happening. But in a abundant compute world, these deals can uh, I mean, again, like these deals could still continue in an abundant compute world too, because then it's like, okay, we have excess capacity. So both ways might actually benefit uh, all of them. So
Right.
it is a symbiotic relationship.
Okay. Speaking of data centers, I made a little purchase after our conversation last week.
Yes.
I bought more IREN, 35% more at $34.96 a share. At the time of the purchase, IREN became 2.6% of my portfolio.
Okay.
Now, for anyone who watched last week's episode, I kind of broke down all the negativity around IREN. I agreed that it is negative, but I thought that the stock was oversold. And I think Hamid felt like it was appropriately sold off, and that I should
I haven't
maybe
been
sell.
just to sort of like in my defense, I haven't been following IREN, so I don't know if it's appropriately sold
Right.
off or
Yeah,
not.
you're
But
just watching from afar.
yeah, yeah. What has the historical price of iron been? Can you click on it and
Uh,
let's look at like the
yes.
1 year chart. I'm kind of curious.
Let's, uh,
Ooh, it's like
5 year. There we
exploded.
go. Yeah. So I mean, it kind of shot up a year ago, but has kind of ranged since then and hasn't been able to break out of the range
The range is between
between
like 40 and like 70. What is that? Is
yeah,
that
30, 35, and like 70. Yeah.
okay? And
So
now it's
we're
on the
we're in the
lower
lower
end
part
of
of
that
the range.
range. Okay.
Yeah. So not only did I buy more just to mess with you a little bit, um, there were a couple of other reasons why. So if you look at their revenue chart, you'll see in 2 quarters from now, revenue is supposed to shoot up from around, let's say, 150 million to 300 million. So it's supposed to double
Almost
um,
double in two
in
quarters.
two
Okay.
quarters. And that's because the transition they're making. So again, IREN historically has been a Bitcoin mining company, and they are transitioning the business to be an AI data center company. And
Right.
the revenues from this transition have not actually hit the books yet.
Right.
80% of the revenue that they're reporting comes from Bitcoin mining. So
Gotcha. Gotcha.
we're like on the precipice of this transition actually showing up in the numbers.
Right.
Um, so as long as you believe that they can deliver,
Do that
uh,
transition.
and they can transition successfully, which I think they can as an investor, this is a very exciting time in my book.
Okay.
Um, so there's that piece. The other piece is that they continue to increase their target ARR for the end of the year. So after made this purchase, IREN announced that they are increasing their target ARR by $300 million. So before, their target ARR was 3.7 billion, and now they're targeting over $4 billion.
Exiting
This
this year with $4 billion of AR expected revenue for the following year. Is that how I'm
correct,
reading that?
correct,
Okay.
exactly. Yeah, otherwise the earnings chart I just showed would like really shoot up if it was for this
Right.
year. But that's exactly right. And this additional increase of ARR comes from roughly 8 new customers. One of them is Perplexity.
Okay.
And of the target ARR, about 85% of it is actually locked in under contract, which has been the
Oh, wow.
case since the last target they set in the previous quarter. So that they've continued with that 85% number.
So over 3
Um,
billion is basically the revenue is almost guaranteed to be over 3 billion unless they can't deliver.
Correct. Exactly.
Pretty incredible.
Um, Now the a potential bear case, or not bear case, but
Downside
a
risk.
call out to make, yeah, here is of this target ARR, and they just signed these 8 new customers. 65% of the ARR comes from 2 customers,
Hmm.
Microsoft and NVIDIA. And it's never great when you are that concentrated with your revenue source. So while I'm always happy to see new deals come through, especially from a variety of different players, um, there's still that risk of, if Microsoft were to drop out or NVIDIA were to drop out, it would be a very big hit for IREN. And
Right.
by the way, both of their contracts are 5-year contracts. So right now they're kind of in it for the, short to medium term. So they shouldn't be going anywhere, assuming everything goes according to plan. But
Right. Right.
that is still a risk, and these deals do not solve that risk. They help a little bit, but they don't solve that risk.
Gotcha.
So anyway, I'm very excited about that. It was perfect timing that came out, a couple days after I bought more. So thank you for pushing me to do that.
That's funny. Um,
Um,
I'm looking at after. Wait. Are we done with topics
yeah.
or?
Well, we
Okay.
have one more topic and then listener questions. But do you want to pivot back to Google and Tesla, or?
Oh, yeah. I was just going to say it looks like Google after hours hasn't really moved in either direction much. It's down like 29 cents, and then um, Tesla appears to be down roughly 2.5% after hours, not down $9 to 365. So um, doesn't look like the Tesla news was positively viewed.
No, but nothing too dramatic. I don't view either of those moves as
Yeah, yeah,
anything of
agreed.
substance. It could move that on any day,
Also,
let
their
alone an
earnings
earnings
calls
day.
haven't happened yet. So when their earnings calls happen, it'll be a lot more interesting. And of course, I'll definitely be listening to them. And we can, if there's anything it's super interesting, we'll talk about it next week as well.
Yeah. Okay, last topic, and then we'll get to listener questions. So another holding of mine, EOS, was selected to be a part of America's Golden Dome project, to be their energy storage solution. And the stock initially popped a decent amount. I forgot the exact percentage, but it popped on the news and has since totally come back down. And to me, I think that makes a lot of sense, actually. So just to rewind a little bit, EOS is they provide zinc-based batteries for long duration energy storage. So it's different than the typical lithium-ion batteries. Um, the 91% of uh, their domestic content, or 91% of the domestic content used to build the batteries, comes from America, which is
Okay.
very important because it makes a lot of sense for the government to do this deal, which
Right.
is my critique, is like, this this feels like a layup. And by the way, the deal, the dollar amount wasn't disclosed. They just said multi-million dollar deal. So
Okay.
if it's in the tens of millions, I don't think that's doing anything for anyone. If it's in the hundreds of millions, that would be very substantial. But I think they would lead with that number. So it's probably in the um, lower end of the million mark, if I had to guess. But
You
to
mean the
me,
lower end of the $100 million mark?
lower end of, like, I would think it's it's a, I don't know, $9 million deal or something.
Oh,
Like,
okay. So you think it's single
I
digit
I think
millions?
it's fairly small that they
Okay.
didn't disclose it, but it's
Okay.
enough to check the box of multi-million.
Right.
But I don't know. And yeah, that's just speculation.
Yeah.
But again, my concern here, not even a concern because this is positive news, but what I want to see as an investor is them doing deals with other companies that are not America, because America is incentivized, especially for a defense project where they
Right.
want everything kind of coming from America. Um, I would like to see some other clients um, to you know move EOS in the right direction in regards to revenue growth. So
Right.
this was positive, but I didn't think it was overly positive. And if anything, I felt like this was a little inevitable. Not necessarily that they were going to do the Golden Dome project, but that they were going to do more government projects.
Right. Right. Gotcha.
Okay. With that said, now we can get to
Should
listener questions.
should we bring in
Hello.
Adrian? Hi, Adrian.
Yeah.
Hi. Let's go ahead and let's do this one. With tech being so volatile lately, how are you diversifying? Any mid, small cap stocks or healthcare stocks you're liking right now?
Dustin, why don't you answer that question first, since you have a more diversified portfolio than I do?
Only slightly. Yeah, so I mean, I just spoke about IREN and EOS. EOS is currently on the chopping block for me, so I wouldn't necessarily say I'm in love with them right now. IREN, I do like quite a bit, and I am excited about their future. I also, on my watch list, I have, and I've talked about this every so often, Once Upon a Farm, which is a uh, like kid food product company. It's from the same CEO as Annie's. Uh, my family really likes their products. I'm not invested in this company, but I am watching them. Uh, in regards to healthcare stocks, I don't follow healthcare stocks, but I do think it's funny the way your question is worded is mid cap, small cap, or healthcare stocks. That's the group.
Yeah. I have grown up in tech, so I'm kind of used to the volatility. But the way in which I deal with the volatility in general for my portfolio, which is pretty volatile, is that I have a pretty large cash position. So I don't diversify. I'm very concentrated investor. I have been historically for the past roughly 25 years, somewhere in that neighborhood. Uh, Prior to 20 years ago, I wasn't as diversified. I'm sorry, I wasn't as concentrated. I was very diversified, or I was way more diversified, I should say. Half of my portfolio was in index funds. The other half was maybe in 15 or 20 stocks. And I realized that all of my gains were actually in the 2 or 3 stocks that I was most excited about. And then I switched my strategy to just investing the whole thing into the companies that I was the most excited about. Keeping in mind that valuation matters. So even if I was loved the company and I thought that they were overvalued, I still would avoid them. So I would only buy companies whose valuation was good and I thought the company was great. So the combination of that has worked really well for me despite the volatility over time. So let's go to
Ready to
another
move
one.
on?
Yeah.
Okay. Hi, Hamid. How do you estimate the efficiency of a company investment? Is sales capital a good metric? Another question, please. What is your view on CS? Thanks.
Yeah, so that's a great question in terms of how to estimate the efficiency of a company. I don't think of it from the standpoint of efficiency. I think of it because for example, is a company that is not yet making money efficient? Is Rocket Lab efficient? So Rocket Lab hasn't made any profits ever in its history, but it is a rapidly growing company. Um, And in order to determine whether or not Rocket Lab is efficient, you'd actually have to know what is typical for rocket building. How much do companies typically spend? How many other companies have even achieved what a company like SpaceX or Rocket Lab have achieved? And there's a lot of factors that go into it. So efficiency is not necessarily the uh, the the metric that I look for. It's more like is the company doing things that are impressive, and are they doing them on a consistent basis? And do I think that the valuation of the company is good relative to where the market typically values companies in the similar sort of nature? Um, so that's the perspective I have on it, not sales divided by capital. And then I don't follow ZS in particular. What is that company? You want to pull them up,
Zscaler.
Dustin? Zscaler?
Yeah, I could pull them up. Hold on.
We'll switch.
Want the
Can you
description?
zoom in and go? Let's start with the earnings hub score information. $23 billion market cap, 3.2 billion revenue, 25% growth on that revenue, PE of 85. I'm sorry, forward PE of 85, current PE of 36. And then let's switch over to the earnings tab. This is, by the way, how I evaluate stocks when I'm looking at them. Wow, pretty consistent. That graph of earnings growth looks very
Look at that.
software-like. Yeah, that's pretty cool. What does Zscaler do?
I don't know.
Software as a
Cybersecurity.
service. Okay, so it is a software company. I was going to say it's like very SaaS-like. Cloud native cybersecurity solutions to primarily enterprise customers. Okay, so I mean, I haven't been following the cybersecurity sector very much. It does look like a pretty good company, solid company in terms of revenue growth and things. But when I look at the revenue growth pace as well as the profitability of the company and its current and forward PEs, those things don't excite me about it. So I'm probably like, that's literally how far and how much time I'm going to spend looking at Zscaler, and I'm like done because it doesn't seem super exciting for me to look at it any further. And again, this is just my perspective. This is how I evaluate things, and I also have a tendency to prefer things that I in a space that I already know to some degree. So so the combination of factors makes me less interested in learning more about it.
Yeah, I will say a lot of these cybersecurity stocks are very popular on Savvy Trader. I see them all the time. But
Yeah.
yeah, it's never fully clicked for me as well to jump in.
Yeah.
But I do think, by the way, it's a very interesting time to be in cybersecurity with these newer frontier models of Fable and Codex Soul or ChatGPT Soul. I can never keep up. Of like, it's going to be a totally different game of war in regards to like what these models can do or what people can do, and the defense needed. So,
All
All
right,
right. let's
move
go
on.
Yeah.
This was a question that I thought you might want to comment on, Hamid. SpaceX is worth it. How is Meta valued higher than SpaceX? Insanity.
Some might say it's insanity because of the reverse, meaning how is SpaceX worth more than, or as much? At one point, it was worth more than Meta. How is it even close to Meta's valuation? So let's break that down a little bit, and maybe it would be good to sort of look at the stocks a little bit more depth. So let's look at SpaceX here. It has a $1.5 trillion valuation. Last quarter, it had roughly 18, or it was on a revenue run rate of roughly $18 billion for the previous year, actually. So 2025 revenues were 18 billion with a $1.5 trillion valuation, and it lost money, meaning it lost a few $1 billion. I don't remember the exact numbers, and the financials are not yet provided in detail. And then when we look at Meta, so Meta has over $215 billion in revenue, $30 of EPS, earnings per share, with a $1.6 trillion valuation. And to determine the profitability of Meta, so we got to take that $30 per share and multiply it then by the number of shares that they have. So let's do that real quick. We may as well do a little fun math. Shares outstanding, 2.5 billion. So 2.5 times $30 per share is $75 billion. So Meta in the last 12 months has made $75 billion of profits on $215 billion of revenue. And SpaceX had only $18 billion of revenue and made negative profits of a few billion. So some would ask the question, how is that even possible for SpaceX to be valued as much as it is, right? Because relative to Meta, SpaceX should be, at most, maybe a couple $100 billion company. Meta is not decreasing in its revenues. It's growing actually faster every quarter. If we look at sort of its expectations of revenues in this quarter, it's expected to have 60 billion in revenue, which would put them at a revenue run rate of over $240 billion going forward. So Meta's going to outpace SpaceX revenues for many years into the future, at least at the current paces of each company. Now, if you believe everything Elon Musk says, SpaceX is expected to, Elon Musk said that SpaceX could have $1 trillion of revenue by 2030. Now, keep in mind that SpaceX should have flown Starship commercially by 2020. It should have put men on Mars by 2022 using Starship. It should have had many thousands of Earth-bound flights from one location to another location on Earth in under 40 minutes using Starship. 40-minute flights to anywhere in the world. This was for the price, by the way, of roughly a first-class ticket. These are things that Elon Musk has promised and said that SpaceX would do over time, and then. We don't even talk about many of those things anymore. And these are things that he said as much as 8 years ago that should have already happened by 4 or 5 years ago. So
they were just delayed because of COVID. It's coming.
So, there's actually an interview of Gwen Jotwell, president of SpaceX, where she's like, no, the Earth-to-Earth transport of humans for basically the price of a first-class ticket for roughly $20,000-$30,000, let's say $100,000 for God's sake, whatever price, but going from LA to Sydney in 40 minutes should have been something that they should be delivering on by now using Starship. And of course, Starship has not yet even had a single successful flight. Now, it's incredible what they're doing with Starship, and what SpaceX is doing in general is incredible. Sometimes when I sort of point out these timeline issues that Elon promises, people think I'm anti-SpaceX. I love SpaceX as a company. I think that what they have accomplished is incredible, and I love having this company in America, and it's wonderful. As a space enthusiast, I love what Elon has done and what SpaceX has done, and I'm a huge fan. But $1 trillion of revenue by 2030 seems like it might be a stretch. Having data centers in space at scale, a million data center satellites in space by 2030, early 2030 is even by 2032, 2033 would be a stretch in my view. So you have to sort of take that with a grain of salt. Now, when you take all of that with a grain of salt, and what SpaceX has been able to accomplish historically, which is pretty incredible, it does make sense that SpaceX should get a higher valuation for its current revenue run rate and such. But by the time you get into $500-600 billion, it already would be a higher valuation than a typical company, significantly higher. Once you get over $1 trillion, some would argue that is too high of a valuation. And I am one of those people who argues that's too high of a valuation. So, I argued that at IPO price of 135, and when it opened at 150, it may have been overpriced. And it turns out you can buy it under the IPO price today. So that's the reason why SpaceX, which 100% of its valuation is based on future potential, is valued less than Meta, which all of its valuation is based on existing revenues and profits. So that's the way to look at it, is in my opinion. So
yeah, and going back to the listener's question or statement, if I'm reading between the lines correctly, what they're implying is SpaceX as a company and what they're doing seems like it's way more exciting and maybe even way more beneficial to the world than Meta.
To humanity. Yeah,
right.
That's a good argument, I think.
And while I think that is true, and that is certainly the narrative, sometimes you have to just ignore the narrative and look at the numbers, and question if even if the narrative is that exciting, does it actually make sense for SpaceX to be valued more than Meta? And based on what Hamid, just spent the last few minutes breaking down, I would agree with him. The answer is no, they shouldn't be valued more than Meta, at least today. That could always change in the future as the underlying numbers change. But I think this is an example of when you kind of have to step back from the narrative, because the narrative can only drive so much. There can be a premium on the stock, but I think the premium, at least right now, is too rich. So we'll see going forward.
Okay, Dustin, we have one for you. If the AI thesis plays out as expected, do you believe IREN could become a $100 billion company over the next several years?
I believe it could be a $100 billion company. I believe it could be a $0 company. I believe anything can happen. All that being said, I don't tend to look at stocks or companies and think about where their market cap is going to go. I'm more looking at where's the trend going? Is the company growing? Is the industry growing? As opposed to I'm looking at the specific destination. The other reason why I don't look at destinations or in this case, company valuate or company market cap, is it doesn't necessarily need to get there and it's still like a positive move. And I don't want that to confuse me if I'm looking to exit a position. Meaning, let's say IREN grows to be an $80 billion company. And I'm not saying it's going to grow to be an $80 billion company. This is just an example. But let's say it grows to be an $80 billion company. Maybe I should take profit at that point. Maybe I should take profit earlier than that. But in my head, if I'm thinking of this like $100 billion target, that kind of puts a little haze or fog into my plan of like, oh, I really feel like it's getting there. And I'm trying to mitigate those human emotions as much as possible. So by not setting any sort of target or destination, I kind of avoid all of that.
You get to reevaluate later.
Right. And then it's just easier for me to take profit over time. So I know that doesn't really answer the question, but that is how I think about it.
Well, one thing that I have talked about in the past, and I think you and I may have talked about it as well, is that could this stock have 10x potential in 10 years? Could this company have 10x potential in 10 years? And I think from that frame of reference, the $100 billion number actually is not a bad number to look at, because roughly its valuation currently is $14 billion. I was just looking at their numbers. And the question becomes, can IREN become a $140 billion company in 10 years? And if you look at their revenue growth so far, which roughly is for the trailing 12 months has been 750 million. But let's say if what you were saying earlier, which they do 3.2 trillion, billion, trillion, I'm getting all of the sort of numbers into each other. But if they do over $3 billion of revenue next year, that's pretty astronomical growth over 200-300% growth compared to the previous year, that could potentially, and especially if they could continue significant growth, not at 300%, 200-300%, but even if they slow down to 40-50% annualized for the next few years, it could still have $100 billion potential down the road. So the possibility definitely exists, but the question is, can they continue to compete with hyperscalers who are also building their own data centers? Can they do it profitably, or does the sort of like data center eventually become sort of like marginalized in terms of what kind of margins you can squeeze out of building and renting out these data centers and powering them? So not knowing anything about IREN or their business details, it seems like $100 billion potential is possible in 10 years, and it's going to largely depend on execution. But
great point.
Okay. Question for Hamid. What do you think of the Netflix crash recently?
Yeah, it's a good question. So I've been in Netflix for multiple years, twice in the past roughly 14 years. Once about 14 years ago, after the stock crashed pretty heavily when they announced their DVD and streaming business was going to be separated. The stock crashed something like 60-70% before I started buying it. I thought, wow, this is a great company. It continues to be better. And then after I bought, it continued to crash some more. And then I sold everything by 2018. So I had bought in 2012, 2013. In that time frame, sold everything by 2018. Then I didn't look at it again until it started to crash again a few years ago. And then Bill Ackman invested and then sold everything within a 3-month period. And the stock crashed another 40% on top of having crashed 30% prior. So I became interested again because the price earnings ratio of Netflix was all of a sudden in the teens. And again, I thought that Netflix was continuing to execute brilliantly. They're the only profitable streaming company and so on. So I've loved the company. But then I exited again a little over a year ago, maybe a year and a half ago. Stock continued to run up, and I haven't been paying attention to it. But let's go look at Netflix right now and like do a live assessment as to what my thoughts are. Valuation about 285 billion, revenue 48 billion, growing at 16% for the previous trailing 12 months. Forward PE of 22, current PE of 25. It's not bad. So if I didn't know anything about its stock price, I would say this is not bad. This is actually a good looking tech company historically, right? But now there's like other companies that are growing faster than this 16%, like Meta, that have a forward PE and current PE that's lower than Netflix. And their stock price has also not done well over the past year. So relatively speaking, this doesn't excite me, but this is what I would consider like not a bad price for Netflix. If we now look at their stock price over the past year, what has it done? It's been as high as 125, 26. And yeah, it's a low. It sounds like it's at a 52-week low, down roughly 41%.
Yeah.
It's sometimes these momentum things are also hard to break. But like if I was excited about Netflix a year ago, which I wasn't at 120, I would be far more excited at 70 or in this price range. But these fundamentals are not super exciting.
Yeah, when I think about what's happened roughly over the last year, maybe a little bit more in regards to Netflix, I think of two things that come to mind. And I don't follow Netflix that closely, and I like Hamid, I used to be in it a couple years ago. The first, going back to the narrative, in this case, maybe the narrative does matter a little bit, where the narrative isn't negative, but it's not as positive as it once was. Meaning, we used to have a little thing called FANG. Now we have the Mag 7, but everyone was talking about FANG, of like these were the best stocks in the stock market. and the N in FANG stood for Netflix. They are no longer that front runner. Now everyone's on to AI. So they lost a bit of their spotlight in that sense. The other piece that's kind of going against them is there's a lot more real competition, right? Like now we live in a world where you have
No pun
Peacock
intended?
and
Or
Disney.
did you intend that pun as well? There's also reels.
No, I didn't think of
Real
that.
competition.
Yeah,
I
I
thought
mean,
that's why you
that is
emphasized
true.
real.
No, that is true. Like a lot of people obviously are on TikTok, but most people watch YouTube, I think, on TVs. There's like a crazy stat. I don't remember it exactly, but like most of the watch hours of YouTube are actually on televisions, not on
Mm,
computers or phones. So they do have a ton of competition. The company's still doing well, but they don't have that lead that they once had before. So
right.
that's what I kind of attribute to this correction.
Yeah.
Okay,
Agreed.
let's do one more and then we'll close for the day.
Let's do it.
Hamid, aren't you worried about Bumble stock since it hasn't had any real uptrend for a while?
I'll answer that question in two ways, or with two things. One is I never worry about a stock because of uptrend for a while. Um, just because a stock doesn't have uptrend for a while doesn't make me unexcited about the stock. On the contrary, if the company continues to get stronger and better, it makes me more excited about the company, as I have been getting excited more and more about Meta, for example. The stock hasn't had uptrend for like a year. It's actually down from its highs in the 700s, high 700s, if I'm not mistaken. And I've been buying. I've been buying in the 700s. I bought in the 600s. I bought in the 500s. So that doesn't necessarily concern me. What would concern me is if a company doesn't execute well, and you know it doesn't impress me in some ways. Now, in the past week, I did have one encounter with Bumble Investor Relations, which has dimmed my excitement for this company just a tad bit, because when the rumor came out for that Bumble might be getting acquired, or like seeking to be acquired, I emailed investor relations, and as I often do, I like email executives within a company trying to find out details. And I didn't get a response for nearly 3 weeks. And then last week, I got a response from investor relations, the person I had previously dealt with at investor relations. And 3 weeks later, his response was, "We don't comment on rumors. And by the way, don't contact our our executives." And I thought, wow, I'm probably one of the only uh, huge fans of Bumble stock. How unaware would you have to be for you to respond to one of your biggest investors, uh, or biggest proponents, not necessarily biggest investor, but biggest proponents of Bumble stock, that you would respond to one of the champions in this way, uh, very rudely, and not acknowledge. You know, first of all, take 3 weeks to respond to my to my email, only to tell me that you can't respond to it, to the question, but then to also not acknowledge it. That really put a sour taste in my mouth, and I thought, okay, is this indicative of all of their employees, that they're all this incompetent? If so, that would really, really be disappointing. Um, Whitney, obviously, I've been a huge fan of hers, but uh, that is what concerns me about Bumble more than anything. Is just that one stupid email response that I got last week, and I think it was like Thursday, that just made me so upset with the company and investor relations in particular. So, um, no, the stock price not having a real uptrend doesn't concern me, but execution of the company is what concerns me. And in this case, I got one example of at least the investor relations person being completely out of touch with their shareholders and investors. So I'm an active shareholder. I'm talking about Bumble stock all the time. he has zero excuse not to be aware of who I am and the fact that I'm investing in Bumble and advocating for it. But anyway, so that's my Bumble story for you.
That's interesting. Not to defend this guy too much, but I do think it's a lot easier to um, not perform investor relations well. Like it's very hard to do investor relations the right way, just because there's always something that pops up
Well,
where you're like,
if his response had come in on the same day as my email, or even the next day, that would have been a reasonable response time for an investor relations team for a tiny company. It's not like Bumble is a $50 billion company and has a ton of investors and has got a huge investment relations email queue. This is a direct person that I've communicated with in the past. He has my email. I have his email. So we've gone back and forth. For him to take 3 weeks to respond was in itself unacceptable in my view. And just responding immediately is actually something that I think every person in a company should be doing. So, but yeah, you're right that investor relations is a tough position within a company because there's always going to be upset investors. But I'm not even an upset investor. I've been advocating, I don't know, happy investor in a way,
right.
but not happy that my investment is down 40%, by the way, but happy about what the company is trying to do and accomplish and, sort of Whitney's plans. So,
yeah.
anyway.
And you are totally right. Like he should have responded immediately. There's no reason not to. I was more getting at like how he responded, even though that should also be more of a layup. Even if you're saying like we can't comment on it, there's better ways of doing that.
Right.
Going back to the listener's question, I agree with Hamid. Typically, like the price not moving, the price going down, the price going up. It really shouldn't matter too much because that's just the stock market doing whatever the stock market's going to do. It's about what the company is doing. In this case with Bumble, nothing is happening with their company until they release this overhaul of their product. In my mind, I don't think anything really matters. So I totally buy into the idea that the stock hasn't moved at all. If anything, I'm happy that the stock isn't going down because it certainly could. There's nothing really keeping it up, in my view, outside of the rumor that they might be acquired. But yeah, it does not worry me whatsoever. Okay. With that said, that was episode 49 of Buy Hold Rant. Adrian messaged me a few things to say. Because episode was 49, that means next week's episode is episode 50, which is a very big deal. So I hope you all are going to be there and look forward to it as much as we are.
Wait, are we doing something special for 50? That
makes
me think.
I don't know.
What's
I don't
going
know.
on?
We're going to show up and give it 100%. Isn't that enough?
Okay. All right. But it technically is the 1-year anniversary of the show, which we will have done 52 episodes because we had 2 bonus episodes despite skipping 2 weeks. Those 2 bonus episodes were not numbered, meaning they didn't have episode numbers on them. So we have 50 episodes. We skipped 2 weeks, plus we have 2 bonus episodes. It'll be 52 full episodes after 1 year.
And then the other bit of housekeeping, if we've talked about this before on the pod, we may or may not do a investing 101 like how-to video. If you have any topics, questions, things you think we should talk about in that, please leave a comment down below and we will definitely look at all of those. That is it. I'm done.
Awesome. Very cool. Well, thanks everyone for watching. Appreciate you guys.